Welcome to Core Invest Institute, smart, simple, and safe. And today we want to share with you something very interesting, which is Core Invest Market Insight, right? This is the series where we will be sharing regularly about the current affairs that potentially move the market. And before we start, I would like to introduce myself. I'm Jeremy. I've been investing for more than 10 years and have been in the hedge fund industry for more than 5 years. And this is where I want to share with you a lot about my experience about investing. And how about you, Wan Min?
I've been in the corporate world for the last 28 years, and last 3 years I have been in full-time trading, specializing in stocks and options.
All right, great. So,
looking into the this particular session, as you know, hot on the topic now is the presidential election coming in just about 5 weeks away. And today we had a very interesting first presidential debate, and there will be 2 more coming. Stay tuned on the dates, which is the middle of October 16 and also on the 23rd of October. There will be 2 more coming, and stay tuned.
Yeah, and to make this series very interesting, now we are talking about Republican versus Democrat. And for me, myself, I'll be representing and sharing more about the Democratic Party.
And I'll be sharing more on the Republican, and we'll be fighting the Democrats.
Okay, let's do it. Okay.
So as a disclaimer, whatever we are saying, the speakers are of our personal capacity. They are not in any way recommendations. They are only for education and entertainment purpose. Please do your due diligence when using any of this information from this series.
All right. So as what we are talking about, the hottest topic now, which is the US election, which is coming on November 3rd. And from now to November 3rd, what is going to happen, right? And what is going to happen after the election? So this is what we want to need to know. How does it affect us, right? What can we do and what we cannot do? And of course, you want to know the latest update, right? So this is where we want to share with you this whole series about.
All right. Just a quick update on today's first round of debate. We were looking at a particular survey right after the debate today, and they were comparing and post-debate, looking at 3 criteria. The first one is looking at how much he cares about the people. Second one is how honest or trustworthy. And the third quality is whether he has the stamina for the job. For Trump, post-debate seems to be a little bit better than pre-debate. As you can see, they were inching up by 1 or 2 points higher compared to pre-debate.
Yeah, and as for the Democratic side, you can see for Joe Biden, you can see that there is actually a more significant increase based on the cares that he cares more about people, right, from 52 to 55, and he has more stamina, right, for the job itself from 46 to 49. So as you can compare between the Democratic versus the Republican, you can see that out of these 3, actually the Democratic has 2 points, which is stronger, which is he actually cares about the people like you, and also more towards the honest and trustworthy.
I was just wondering, whether did you watch the debate this morning? It was just so interesting, full of chaos, so disruptive, and I think it was just interesting to see how these 2 gentlemen were fighting.
Yeah.
Okay, let us look into the history a little bit, comparing the past 10 presidents. And in fact, coincidentally, Democrats has 28 years of government, and the Republicans also 28 years of government. Question is, which is a cleaner government? Democrat versus Republican. As you can see from the Republican side, looks like there are a little bit more negative presses, as you can see. Okay.
Right. So let's talk about the past elections, right? And now currently at this point of time, when Donald Trump is being elected in 2016, and it was actually a unified government. And what is mean by unified government? It means that it is a Republican president as well as a Republican Congress. And the Congress is made out of the House and the Senate, right? So it means that it's a Republican president, Republican House, as well as a Republican Senate, right? But then there is a midterm 2018 election result. And what does it mean by midterm? And this is actually to show the citizens of US in terms of its satisfaction as well as frustration over the country's current government. And as we can see that now on the right side of the diagram itself, you can see that under the 2018 Donald Trump as a president, right? You can see that actually they actually lost the House seat to the Democratic itself. You can see from there that on the left panel, you can see Democratic win the House 221 is to 197. However, they still continue to run the Senate because of the higher majority on the Republican side. So now let's talk about the current situation where we are looking at what is happening during this election from the past few months to the today itself. You can see that under the Democratic Party, in terms of the probability based on the odds, right? It seems like it's higher at 58.6% against the Republican Party itself.
So from the Republican side, looks like the probability at the moment is at the 41% below the Democrats.
Yeah. And from here, you can see that under the Congress, we are looking at the probability based on odds, whether, is it going to be a unified government or is not going to be a unified government. And if, say, for example, if no matter what happens, if the Democratic Party is won by, if the election is won by Democratic Party or Republican Party, people are more in favor of the House and Senate, which is the total Congress, that is more towards the Democratic side. You can see that 59.9% of the probability is of people wanting it to be more towards the Democratic holding the House and the Senate.
So post-election, if Trump were to lose, he has already declared that he will not commit to a peaceful transfer of power if he loses the election. In fact, he has also declared that he is not going to lose and there will be no transfer of power. He is confident by saying that.
All right. So be it whether, Trump wins or Biden wins, let's understand more about what is going to happen after the election itself. So let's take a look at Biden's policies and what is he thinking about. And that is where we are looking at the economic growth. We are looking at a tax increase as well as the fiscal spending, which may be met with a resistance, right? And that is where we are also looking at the equity side, right? Where there will be an increased regulation. And also because of the regulation, the market will react. But however, we hope that the bold stimulus by him will actually counter it. But again, we can see that there may be also resistance of being too ambitious over there. And under the fixed income, definitely we are looking at inflation. Their expectations will be unchanged. However, the credit spreads on the corporate high-yield bonds may widen on fears of increased regulation.
If Trump, the defending president, is going to continue into his second term, in terms of the economic growth, expected to see would be spending on the infrastructure, deregulations that will continue to boost the growth. For the taxes part, it will not unlikely to change. It will be status quo, of course. And in terms of trade concerns, as you know, for the last 2 years, the continuous trade war with China and also in Europe as well, it will continue to derail growth in the US. For equities, continued deregulation, of course, will boost the market, and uncertainties will always be there, risk will always be there. For the fixed income, inflation continue to be unchanged, credit spread will be moving with the equities. So this is what you can expect from the two presidents.
Yeah. So in terms of understanding about this election, right, we always want to see how it impacts the S&P 500. And this is why we should look at the historical data of what happened before other different kinds of elections for different presidents. And we can look at, in terms of the average growth of the composite index, normally in these 4 years of president term, we are always looking at the third and fourth term that is always significantly higher than the first and second. And that is because the current president will want to be re-elected, right, to have his own second term, right? So this is why if you are holding equities and in the stock market, normally it performs better on the third and fourth. However, for this year itself, you can see that coronavirus has actually impacted the market together with the oil crisis. We do see a very big dip from February to March, and then it takes about 5-6 months back. And we can see that as of today itself, the S&P 500 actually go back to its current price, right? And you can see, let's compare using this Schroders report itself, and you can see under the Democratic Party, under the Democratic President, you can see out of the blue bars over there, there are 6 blue bars over there. We pay attention to the blue bars, where you can see that not averagely the Democratic returns are higher. S&P in terms of this S&P annual real total returns about 10% that around that range.
Let us then look at the performance of the Republican presidents. So there are 7 red bars over there, and Trump is represented on the last red bar. As you can see, the performance from Trump on the impact of S&P actually is very well. You can see that he has actually overtaken the average of the Democrat average of 10%, and is of course higher than the Republican average of about 6%. So over the past how many years over there, Republican has been performing lower than Democrats, but Trump has been overperforming compared to the Republican average as well as the Democrat average. The other thing is that this is the result of only the past 3 years of Trump administration, because the current year is the 4th year, it is not yet reported. And you can see that during this COVID pandemic, it took 1 month down, and then 5 months, 6 months later, we have almost caught up with the pre-pandemic level, which means that actually the performance of S&P 500 has been very strong. And you can also note that Trump at the moment for the past 3 years has been a little bit below, shy of Obama's 8 years of administration. So what is going to happen for this year is left to be seen.
Yeah, and just say, for example, if Biden were to win the election itself, let's take a look whether Biden is able to actually be above the Democratic average, or on par on the Democratic average. And you can see that Biden has also worked accordingly as a VP to President Obama at the time. So if you want to talk about the comparison of the total results, probably due to the friendship and understanding of the whole US in terms of his years of contributing to the US economy, there is also a high chance, based on the bars, you can see that he will also be either around Obama's in terms of its returns, or maybe higher.
Therefore, our sort of forecast is that whichever president were to win, whichever incumbent were to win, the S&P 500 should continue to grow based on the next 4 years or so.
Correct. And now let's look at the market today, right? You can see that this is the past 5 months of the S&P 500, the price of the S&P index, which is SPX. And you can see that on the last 2 to 3 weeks before, you can see there's a slight dip, and this is because of the profit taking. And why profit taking? Because we are coming towards the election, and if Biden were to win the election, there most likely be a tax raise. And this is where investors do not want to be taxed as much as it is now that it's a lesser tax. Of course, they want to take back more money, and then after that, they will wait until the election is over, and then if there is a correction or not, they will then plan to put in more money, right? And then you can see at the current moment itself, you can see that there are a few candles over here, and this is where people are fear of missing out. They are actually trying to buy stocks at a cheaper price, but we do not know that if there may be a correction after the Biden, if Biden were to win the election.
So volatility will continue in the next couple of weeks and also post the election. Therefore, over the last 11 years of bull run, the pandemic came, but then we have, with a V shape, we have basically recovered from the pandemic period. Volatility is there, crash, correction, potentially there is, so we have been advised also to be careful during this period. So looking into the, as we said, the volatility is there. If we look into the implied volatility graph, and this chart comes from the Citibank, and you can see that when this report was done, it was as of 13th of September. Back then, the VIX, which is the implied volatility, was at a region of about 23, 24 over there, and today it is about 26. And they were expecting on the election day, which is 5 weeks from now, VIX would rise up to about 26.5. But today it is already at 26. So the volatility has increased far higher than expectation. And for this projection, it is about a 12% movement from the 13th of September up to the election day, which is November the 3rd. And for today, we are looking at a higher volatility, which means that we need to be more careful. And with the volatility coming in, we have to think about more safe haven investments that you might want to consider. And post-election, another potential 3% of movement could be possible or higher.
All right. And it comes to inflation itself, this is the projection from this source from Statista, where we are looking at about 2% or 2 to 2.24% in the next year of 2021. And if we think that the inflation is increased, right, means that consumer spending will be lesser, and then it will reduce the growth of the economy itself, and the business will be affected, right? So that is where we feel that in terms of the projection, it somehow confirm that there may be a slight correction. But of course, this inflation can also be adjusted, and we will see on that day itself, in 2021, what is going to happen over there. All right, and then we have to come into the point where we are talking about what can we do and what we cannot do, and how to get the news update, right? And this is where we want to share with you based on the source from Morgan Stanley that is being shown on CNBC itself. And you can see that if, say for example, if Joe Biden is going to win with a Democratic president and a split Congress, we are looking at emerging market and alternative energy. Why? Because according to the policy set by Joe Biden, is that he wants to look into more green energy, right? That is alternative energy. And that is where if green energy is going to be on the rise, then the other energy sector will decrease, like the gas and oil, right? That's why they say that sell US energy, big banks, then there will be a tax increase. That's where the tech will drop, as well as the drug makers as well. And if it's a Democratic president and a Democratic Congress, which is a unified kind of government, then we are looking at the appreciation of US dollar, transportation, as well as green energy. Whereas we're looking at the selling of US Treasury, drug makers, big banks, tax, and US energy itself.
So in the scenario of the Republicans were to continue into their second term with the defending President Donald Trump, potential buys are the big banks, the US energy, telecoms, and of course the potential US dollar. But having said that, the US dollar is something that we want to take a look and to be careful as well because of the volatility. And the potential sell could be the US Treasury bonds and the emerging markets.
Wait. Breaking news. Oh my God.
What happened?
This is going to be crazy. It's really huge, man, this thing.
Right. So as you all know, the bird was just tweeted, Donald Trump tweeted that he and his wife got COVID-19. I'm sure some of you have heard. And oh my God, what's happening in the midst of the election? So now what happened is that the incumbent defending president got COVID. So what's going to happen? And potentially his running mate, which is Joe Biden, could also be testing for potential COVID as well. And both the incumbents are aged 74 and 77 respectively. They are both elderly gentlemen.
Yeah, correct. See, and this is this diagnosis is just less than 48 hours since the first president debate. How this started was that Miss Hope Hicks, Trump's close aide who traveled with him, was tested positive on 1st of October 2020. All right. So this is where Donald Trump and as well as his wife went for the COVID-19 test itself. All right. So if that's the case, I guess that Mr. Joe Biden, right, will also require to go and take a look at it at the test as well, because he didn't wear mask on that day also. All right. So this is a very, really huge thing over there.
And in fact, it was so interesting when Joe Biden says that he should be wearing mask, and our President Trump was there that he was having his mask bigger than his face.
Yeah.
And he says, "I have my mask in my pocket."
Correct. Yes.
It was so cartoon.
Yeah, correct. So a lot of arguments over there, but it's a fact now that both of them are in danger, right? And that is where the Democratic National Committee apparently has a clear rule for such a situation, and it will choose the new nominee in consultation with the party leadership, including Democratic state governments. But that does not mean a certain outcome, right? As it is subjective to a vote. For example, if Mr. Biden were to die, it is not certain whether the substitute would be his running mate, Senator Kamala Harris or Bernie Sanders.
And of course, if President Trump were to continue into his second term, re-elected, and he died, what happened? So potentially the vice president, who is Mike Pence, may be the strongest candidate to take on the president's role, or it could be somebody else nominated or appointed by the Republican Party. So all these things are left to be seen. So when the news got out at about 1 o'clock today in Singapore time, market actually dropped from 3360, dropped to 3300, 60-point drop in 30 minutes. And subsequently, it got picked up with a pullback. And during the London Open at 3 p.m. Singapore time, Malaysia time, Hong Kong time, it was hovering at the midpoint of 3330. And that's what it is up to now.
Correct. So again, there's a lot of volatility in the market. So again, we do not know what is going to happen till the next, which is the next president debate. And we also heard from the news that the next president debate is going to be postponed because of this current
October 15.
Yeah, October 15
October
will
15,
be posted. Yeah.
Postponed or maybe cancelled, we do not know. Left to be announced.
Correct. So again, we have to keep ourselves updated to know more about this. All right. So in terms of understanding about the market itself, we want to look at what are we now. We can always look at the Schiller P ratio to see how expensive the country is. And accordingly to the Schiller P ratio, we are about 30.78, means that it's actually quite high. Why? When we compare with the previous market crisis, which is very far away, which is on a Black Tuesday, you can see on the 1930s around that range, there was a big financial crisis at that moment. And now at this 30.78, a high next crisis over there, and that is where we want to look at. If there's high P ratio, you want to hold more cash, and if there's market crash, then you can actually have those money to go and buy all those good companies in your watch list itself. And now we are looking also at the fear and greed index itself. You can currently see that it's in the middle, right? In the middle means that no one is being greedy, no one is being fearful, but because now everybody is waiting for the US election to be to actually occur first, and then put in money, right? So again, if the fear and greed index is on the greedy side, then probably you want to hold more cash so that you can actually look at, if say for example, if the market crashes, then you got money to go and buy, right? So again, this is what Warren Buffett shares. Be greedy when people are fearful, and be fearful when people are greedy. Right. So, why don't you share about what you're going to do?
Yeah, considering the history and the turn of events that is happening now and the coming election, I am doing 5 things actually. There are 5 things that I'm doing. Some are already in progress. I have been liquidating my equities basically because of the volatility. And while the prices are still good at the moment, this is a good time for me to take profit and to liquidate them. And potentially, if the crash is coming or correction is coming, that's where I will pick up from the lower price. Second thing is that because of volatility, VIX will be good for me to pick up. Potentially, it will rise up as well. And gold and silver. Gold is really at its peak, and therefore safe haven for me would be silver. In fact, I have positions in silver which are not doing very well, but I'm quite confident that it might not in mind. I'm quite confident that it should be going up because of all this volatility. It's something that people will be turning into. Next, of course, will be my options. Options, I'll be doing more of the short term rather than long term options, and it will be more of opportunistic even on day trades of options. Diversification, of course, that will be especially after the post-election, looking more into picking up some stocks into more diversified, and based on the guidance that we have shared, those are the areas that I should be going into as well. What about you, Jeremy?
All right. So as for me itself, likewise, same as Wai Min, I've been liquidating quite a lot of my positions, and that is where I would like to hold more cash and wait for the election to occur, and then see what is going to happen after that, right? So we have shared with you, what like Morgan Stanley have shared, and for me myself is that I'm still continuously holding some stocks that I have held for a long period of time. Because they are stocks, I can actually wait. If there's a market crash, I'm fine because I'm holding stocks, and I'll be also doing very short-term options so that I still can continue generate those cash flows. All right. And other than sharing about Wai Min and myself itself, why not we hear from the expert, right? A very famous guru, which is Dalio himself, and he shared three pieces of advices, but in this series itself, we're going to share two out of it because one is not really very relevant, and his advice is to how to manage your savings and in a coronavirus recession, and of course the current US election as well. Right. So let's hear from him. And one of them he's trying to say is diversify your investments, right? We need to diversify by holding assets that will do in a rising or falling growth in environment, all right, or a rising and falling inflation environment. Okay, so this is where you want to diversify by holding international as well as domestic asset classes. Okay, so again, don't put all your eggs into one basket. Maybe you can invest out of US, put some in other countries, example, Hong Kong, Singapore, and so on and so forth, right? And then of course he looked at gold as a more attractive asset. And what Wai Min have shared now, gold is actually at the highest peak and is coming down. But then there is always potential because of the when there's a market crisis, people actually, smart money actually move to all these safe havens, right? And he also says that, including Warren Buffett himself, he also looked at gold. He actually had some position, which is a GOLD, which is a gold mining company. And that is where he looks at a relatively safe and steady investment in time of crisis. And also he shared the next point, which is don't try to time the market. And that is where this is very important for him, because he says that it's better that for non-professional investors to take longer term positions in a diversified portfolio that pays over time, right? Because we want to know that even for the professionals, right, it's also extremely difficult for them to actually do well for timing the market, right? So all investors need to keep in mind the historical cycles and patterns of the economy and stock market if you are looking at timing the market. All right. So in order to understand more about this, actually we have a lot of data resources for you, and this is one of them. You can always log in to callhub.me/world news to look up on the latest update of all the different news in the macro and micro in terms of the economy itself. Do a scan on the QR code to actually have a free membership over there, and then sign up to learn more about understanding the market, as well as if you are looking to learn how to invest into stocks or options itself. There are many free guides over there, as well as the free mini course. And of course, you can always join our Facebook group, our private Facebook group, where we will share a lot about the market news as well, together with options, right? If you are interested to know more about options itself, do join this group and do a QR code scan over there. And this is where we will see you there, and we can actually, Wai Min and I myself, will share a lot about the news and updates about the current election. All right. So we are coming to the end of the session itself. Thank you very much for watching this video, the smart, simple, safe way to invest.
So trade smart and stay safe.
All right. Take care in this current situation. Take care and see you on the next one.
Bye.
Bye-bye.